Joint accounts can be a really useful way to manage your money as a couple or with a friend or housemate, but they're not without risks. Now, not everyone in a relationship wants or needs a joint account with their partner, but if you're considering one, here's what you should know. So, what is a joint account? Well, a joint account is usually shared by two people, although some banks allow up to four names on the account. Each person named can make withdrawals and deposits. They're also all equally responsible for managing the money in the account, including debts, which I'll talk more about later. You'll also both get your own debit card and separate login details to your online account. Now, there are a few reasons why you might consider a joint account. So, if you've got shared expenses like a mortgage, rent, and bills, having the payments all leave the one joint account can be more practical than transferring money from different accounts each month. They can also give you both transparency as to what the other is spending, which could potentially avoid arguments. It could also give you a reason to talk about money and make decisions together. Using a joint account can also help you budget and save as a couple. If one person isn't working, perhaps they're on maternity leave, a joint account can give them access to the shared funds. You can also earn extra perks on joint accounts if you have one with your partner, which I will talk more about in a moment. Now, even if you get a joint account, you don't have to put all your eggs in one basket. So you can have both a personal and joint account, and it's a really good idea to do so. That way, you can maintain your financial independence, have control over your money, and save for your own goals while also managing your money as a couple. You also don't need to have both accounts with the same bank or building society either. Now, if you opt for an account that offers perks like cashback on spend or bills, you may be able to earn more together with a joint account. So, for example, Santander's Edge current account pays 1% cashback on bills up to £10 a month and 1% cashback on supermarket spend, again up to £10 a month. If you pay all your bills and buy all your groceries together from the joint account, you're more likely to get the maximum cashback. The account does cost £3 a month, but you can split this between you. You can also open up two Edge Saver accounts currently paying 6% interest. If you like the idea of perks, you can earn extra rewards by having joint accounts as well as personal accounts. For example, the Club Lloyd's account offers freebies such as 6 cinema tickets per account. A couple could have two personal accounts and one joint account to earn 18 tickets in total. Similarly, if you opt for a joint package bank account, you can both benefit from travel insurance, gadget cover, and breakdown cover for the one monthly fee, which is the same whether you have the account as a single person or a couple. If you're looking to switch to a new provider that's offering an incentive to new customers, you can switch your joint account to a new joint account with that bank. However, most banks only allow one bonus per person, which means you'll just get the one payment between both of you if you switch into a joint account. So you're better off switching one personal account each instead and getting two bonuses. However, there is one exception. Nationwide lets you switch into both a personal and a joint account, so you could get three bonuses between you here when the deal is running. You can switch a personal account to a joint account, but you can't switch it the other way around. Now, while all of that sounds great, I do want to go into the risks of joint accounts because they can be really serious. So, firstly, opening a joint account means you are financially linked. So this means when you apply for credit, such as a credit card loan or mortgage, your partner's credit history could be taken into account as well as yours. So if they're not as financially responsible as you, it could scupper your chances of getting credit. Now, the key here is to have an open conversation about your financial history and find out as much as you can about your partner before opening up the joint account. Secondly, your partner could drain your savings. Having a joint account means your partner has the right to spend whatever's in it, no questions asked. If your partner goes on a spree and the account ends up overdrawn, you'll both be responsible for clearing the debt. Now, one way of reducing the risk is by setting up your account as two to sign. This means both of you will need to approve any withdrawals or payments in a branch. However, in reality, this isn't really that practical and your partner may not agree to it anyway. If the relationship ends, you can ask the bank to freeze your account to stop your partner making any withdrawals before getting the account closed. Having a joint account could also leave you more vulnerable to financial abuse. So as your partner can move and spend money from the account whenever they want, they could take complete control of the account. They could steal your money or deliberately deprive you of access to the joint funds or create debt and coerce you into repaying it. And finally, if you want to close the account, now this is really important, both of you will need to agree. As I mentioned before, if your relationship sours, you can ask your bank to freeze the account to stop your partner spending. But before you do this, you'll need to work out how you'll pay your mortgage, rent, and other bills that come from this account. But to close it completely, you both need to agree. This can be really difficult if your partner can't be tracked down or you're not on good terms. You can't remove someone from the account without the consent. If there are any regular payments or debts on the account, you'll need to decide how these will be settled before the account can be closed. If your partner can't be found, you could end up being pursued for the whole lot. If you can't get their consent to close the account, you could try mediation. There's more information about this on the Citizens Advice website before going to court. And then once the account is closed, you'll want to make sure you're no longer financially linked. You can contact the 3 main credit reference agencies, Experian, Equifax, and TransUnion, and complete a notice of disassociation. So as you can see, getting a joint account is a serious consideration, but if you're still keen, here is some further information. So if you're wondering how to open one, you can add your partner to your current account or open a separate joint account together. Some providers allow you to open an account online, whereas others may ask you to book an appointment in your nearest branch. As with opening any bank account, you'll need ID and proof of address, and you may need to pass a credit check. Another thing to know, if your partner dies, you'll be entitled to all the money in the account. You should tell the bank about the death, and you may need to show a death certificate to get the account transferred into your name. Interest is something to think about with joint accounts, especially when it comes to tax. Any interest you earn in a joint account will usually be split equally between each person. So say you earned £1,500 in savings interest in your joint account, you'd both be considered to have earned £750 each. As with any interest, you may have to pay tax on it if it exceeds your personal savings allowance, but you'll be taxed differently if you're in different tax brackets. So let's say you're a higher rate taxpayer and your partner pays a basic rate of tax. If you earn £1,500 interest in your joint account, the £750 of your partner share would be within their basic taxpayer's £1,000 personal savings allowance, but you'd have to pay 40% tax on the £250 over your £500 allowance. If you don't want to split the interest equally, perhaps because you contribute different amounts to the account, you can contact HMRC. If your bank is covered by the Financial Services Compensation Scheme or the FSCS, up to £85,000 is protected if the bank collapses. In a joint account, you get double the protection, so that's £170,000. Now, if we look at other financial products, you can't have a joint ISA, nor can you have a joint credit card. However, with a credit card, you can add other people to your credit card account. They'll get their own card and PIN for their own spend, which can be useful for earning more rewards and cashback, but you will be the one responsible for paying the bill. Now, when all is said and done, you don't need to do joint anything. You can decide to keep your money separate and transfer the cash to each other when you need to. If you have shared bills, you'll need to decide who's going to be the account holder and who will be responsible for the direct payments in this situation. But if you do, you can log all your expenses on a bill splitting app like Splitwise to keep track. Or you could get an account which comes with an extra spending card. So some banks like Starling, Lloyds and Barclays allow you to give a secondary debit card to a trusted person. You remain in control of the account and you can set spending limits so they can't go rogue with your money. Now, it's not quite the same as a joint account, but it could be really useful if you rely on your partner to shop on your behalf. Now, getting a joint account with your partner isn't just about trusting them. At the very least, even the most decent, trustworthy person can make financial mistakes, which could impact your finances and ruin years of being responsible with your money. And in the worst case scenario, people we think we love and trust could end up not having our best interest at heart. I think lots of couples think they need a joint account, especially when they move in together. However, you don't. There are ways to manage your finances as a couple without one. If you understand the risks and still think it's worth getting a joint account, I've included some tips in this video. I'd always recommend having your own personal bank account in addition to a joint account to give you more control over your money. And that's it. Thanks so much for watching. Check out these videos here for more ways to make the most of your money.